Mitchell is a real estate entrepreneur that focuses on syndicating multifamily properties and currently has over $17 million in assets under management. He's also the co-host of the weekly real estate podcast, Passive Income Through Multifamily Real Estate. His background in operations management and logistics has given him insight into the importance of systems, and in our case, asset management. You can have an outstanding deal in a great market but still lose if you don't manage the asset properly. Join us in this episode as Kyle shares some tips on how you can level up your business with asset management. Also, if you haven't done so yet, make sure you get registered for the Asset Management Summit Kyle is hosting. You can go to amsummit2020.com and register there. All right, welcome back to another episode. Today we have Kyle Mitchell joining us from Southern California. Kyle, welcome to the show.
Thanks for having me on, Dion. Excited to be here.
Excited to have you here. I see that in your background there, you've got the Virtual Asset Management Summit. So let's go ahead and tell our listeners about that.
Yeah, absolutely. I appreciate that. It's a summit for asset management, essentially. There's a gap in the market, in our opinion, that is happening right now. There's a lot of education on how people get started, how to get your first deal, but there's not a lot of training on what you do after you get that first deal. And how do you manage it? And how do you get the most operational efficiencies out of it? And so we've created this virtual summit to educate people on that and to become better operators. So we've got over 30 speakers, world-class operators that are going to help on the asset management side. So usually a lot of these speakers just talk about what they do to get a deal, but now we're going to get into the nitty-gritty and talk about what they do on a day-to-day basis to get their operations running more efficiently. So I'm excited for it. It's going to be a great event, and it's completely free, and that's in September 21st.
Yeah, I'm pretty excited too. I mean, like we were talking before we hit the record button, Gary Lipsky had mentioned this to me before, and I'm really excited. Also, I mean, what's even more exciting is it's virtual. So there are no excuses. I mean, everybody could attend. So definitely looking forward to it. Now, let's go ahead and especially for our listeners that aren't familiar with you, can you tell us a little bit about your background and how you got started in real estate?
Yeah, sure. So my background was in operations and management, and I was a regional manager for a golf management company. So very similar to what a property management company does for apartments, but we were property management for golf courses. So I worked in that business for 20 plus years. I was a regional manager for 15 years and oversaw about 250 employees, 20 million in revenue. And during my time in the golf industry, I also started investing in real estate just as a side gig, kind of just to create some passive income and my investment strategy. Never really been in the stock market. So I invested in my own primary home, did like an in-house flip, and then turned that money into some single family homes in the Midwest, and quickly learned that it's difficult to scale with single family homes. And so I started looking for another investment vehicle, and that's when I found multifamily, and I actually left my job to pursue multifamily full time because I just loved it and fell in love with it so much. So that was kind of my journey getting into multifamily. I did plan on leaving my job a couple years before, and I was really searching for the right career move. And as soon as I found multifamily, fell in love with it. And 11 months later, I left my full-time job to pursue it.
So you left from the time you started multifamily until the time you left your job, it was 11 months. What was that transition like?
Yeah, so, I wouldn't suggest everybody do it. We actually, I left my job before we even got our first property under contract. We got that under contract a couple months later, but I had been planning on leaving my job for about 2 years. So I had been saving up a nest egg. My wife had a full-time job and she was supportive of the move. But really what it was about was full-time education. So I drove to work an hour each way. So I was in the car 2 hours a day. And I'm just consuming podcasts, consuming coaching videos, consuming books. After work, I would go to meetups. We started our own meetup. So it was just all education for 11 months straight, 7 days a week. We would work on weekends, setting up our website, building our investor database. So it was a grind for sure, but it was well worth it. And, I just took that 11 months really to educate and build our business up.
And how did you find your first deal?
Yeah, so just by hustling, my wife and I, when we had full-time jobs, both of us, we would drive to our market. We don't live where we invest. We invest in Arizona, so in Tucson and Phoenix. And so we would wake up at 2 in the morning, drive to Tucson, which is about 8 hours. And we would drive there. We would meet with brokers, property management companies, tour properties, and then drive back, get home around midnight the next night. So on one of those drives, one of the brokers called me and said, "Hey, I literally just got the keys. I haven't seen inside any of these units myself. Would you like to go?" So it just happened to be good timing that we were driving out there. But I think the biggest thing there was just showing the brokers that we were serious. I mean, not many people will drive 8 hours in the middle of the night to go visit their markets. And so by doing that, we really separated ourselves from other people, and we were able to see this property first. And a couple of weeks later, we were able to get it under contract.
And how many units was it?
This is a smaller one, 42 units, which I think was a perfect size for our first syndication in Tucson. And it was mainly my wife and I, and we brought in another business partner to help with it.
Oh, so you guys, so just three people, three partners, basically.
And one signer on the loan. Yep.
Okay.
Yep.
Okay. All right. Got it. Yeah. And then from there, you guys kind of rolled over into larger projects. So how, from the time that you finished your first deal, we always hear about the law of the first deal, right? So from the time you finished the first one to the second one, what was that transition like? What was that period?
3 weeks. So the law of the first deal certainly worked for us. 3 weeks later, one of the guys that actually signed on the loan on the first deal, he has a full-time job, and this is what I was doing full-time, and he got another deal sent to him from a broker that he had closed 2 deals with on earlier that year. And it was a week before it went out, or probably 4 days before it went to market. He sent it to me. I underwrote it. We were out there the next day touring it, and then the first day it went to market, we had it under contract. So it happened very quickly.
And the partner, basically, like, you found essentially someone to sign on to the loan, the person that you came on with. Like, how did you find these people? I know you mentioned you had started a meetup, right?
Yeah,
Okay.
That's exactly where we met him. The person who was signing on the loan just started coming to our meetup. We were talking. We were looking in the same markets. He had closed on a couple of deals, so we actually asked him to speak at our meetup, and we just kind of formed a friendship. And then we ended up taking a couple of drives and seeing a couple of properties out in our market, which is Phoenix in Tucson. And, spending 14, 15 hours a day with someone when you're driving back and forth, you get to know them really well. And we became friends. And after that, I'd say it was probably about 8 to 10 months after we first met, we did our first deal together.
Mm-hmm. So what do you find that you guys are doing that's really helping move your business forward?
It's about consistency for us. There's a lot of people that are in this business, and it's definitely a crowded space, but I think the way you can separate yourself is through consistency. I think the people who do it the best are the ones that are the most consistent. And so, when it comes to anything from our monthly newsletter, our communications with our investors, our meetups, our podcasts, whatever it is, we're consistent. It's the same day, time, format every time. And people see that over time, and you just build more of a following. But if you're inconsistent, people aren't sure if you're serious or not, and it was just like our drives out to Tucson. It was every, second or third Wednesday of the month, and we would make sure we were out there every single month calling, talking to brokers. So I'd certainly say consistency.
And what were some of the things that you did to remain consistent? Because, I mean, consistency is really a challenge, I'd say.
Yeah. So for me, it's just kind of been built into my system since I was a regional manager with a golf management company. It was, things are in the corporate environment, things are due on a certain day and on a certain month. And so it's really about consistency in that business as well. So it's just kind of training for me, but it's just having structure. When I first left my W-2 job, being an entrepreneur for the first time, I really found a difficult time getting structure, because when you go in, there's your boss who expects you to get things done. When you're your own boss, you're kind of figuring it out as you go. So really implementing a structure in my system and my weekly workload has been key for me. And so, I always plan out my week on Sundays for the following week, and just making sure that these are the top X number of things I need to get done this week to move the business forward.
Mm-hmm. Are there any particular tools that you use to help you with your planning?
I use ClickUp is one that I use. It's kind of like Asana, kind of a scheduling tool, and Google Drive. I just keep all my stuff there, but most of my stuff is just really in my calendars is what I use. I use a bunch of different tools for different things, but as far as holding myself accountable. It's really old school kind of paper and pad and my phone calendar. So I like to cross things off. So the top things that I like to do or have to get done every week, I like to cross them off my list. And it's one of those things that really feels good and is good for my positive energy.
Mm. What do you think has been one of the biggest missteps that you've made in your business?
Yeah, so I talked about a team and having a team on our first two deals. I think the misstep was not bringing on that team sooner and really trying to form that team earlier rather than later. At first, the idea was that my wife and I and then my parents were going to sign on the loan on the first deal, and we were going to do it all by ourselves, and we wanted to take it down by ourselves. And there was kind of an ego thing and a pride thing, and I think that it would have been bad in the end, even if we would have closed on that first deal with just us, because we wouldn't have had the team to take down that second deal, which was actually a $15 million deal, right? So we went a huge step up, and without that team, we wouldn't have been able to do that. So, on that first deal, it was a scramble getting to the finish line because we had to get our team on the back end. On the $15 million deal, we had part of our team set up, but we had to find the rest of our team on the back end. And so when you're closing on a multi-million-dollar deal, there's so many things happening at once. I mean, whether it's due diligence, SEC attorney, raising money, webinar, all that stuff, the lender, you've got so many things to do in a very short amount of time. Trying to put together a team and the right team while you're doing that, it just creates a lot of stress, and you can really miss things when you're doing that. And we were lucky enough that we didn't. But in the end, I would have definitely set up our team in advance, which we have now. And so we already know who our team is when we're going to go close the next deal. So it's very streamlined and things are set up better now.
And speaking of team, especially for new people that are out there, can you tell us a little bit about, what does it take for a new person to set up a team? How should they go about doing that?
Yeah, you can go it in multiple ways. It really depends on what niche you're trying to get into. For me, I was a lead sponsor right off the bat. I wanted to be a lead sponsor, and it really fit my background being in operations and management for 15 years. But if you have absolutely zero experience, what you want to do first is understand all the different pieces of the pie in multifamily or whatever, industry that you're in, because you don't have to be able to do the whole thing. You just need to be able to bring value in one piece of it, whether it's underwriting, finding a deal, upfront capital, asset management, raising capital, whatever it is. And once you find your niche, get really good at it, be educated at it, and then find someone that needs that niche to add to their team. But it's all comes down to adding value, and it's true value, not going up needs an underwriter and saying, can I underwrite for you? Go underwrite like 4 or 5 deals for them without them even knowing. Send it to them, show them your skills, show them that you're willing to work hard up front, and that will pay you dividends. Because a lot of people who now want to add value to people, the go-to is, hey, how can I add value to you? And that's not adding value to someone. It's really about putting that work in on the front end.
Yeah, that's a really good point. I think I've had a lot of people even just reach out to me before, and they're saying, "Hey, what can I do to add value to you?" I'm like, I don't know. Yep. I don't know who you are. I don't know what you could do. That's a really good point. And you mentioned here, like, take for example with the underwriting, where people you could basically underwrite some deals and then essentially pass them on to that investor, maybe, ask them what are their thoughts about that. Another thing that came to mind was, I think it was what David Tupin did. I think he put together, It was like a website or something for one of the investors that he's partnered with right now. What are some other things, especially for like people that can't really do underwriting? What are some other things you think that maybe your average person could just do?
Yeah, what David Tupin did, actually, he just met this guy, and he's his business partner now, and he had 4,000 units, and he had overheard him saying that he had been wanting to write a book for years, but he never did. So what he did is he went out and he created the cover and the title of the book for him and sent it to him. That's adding value to someone because it pushed him to eventually write the book. Maybe it's finding a deal and bringing it to someone, but it's not giving more work to the person you're trying to add value to, right? So even if you're underwriting a deal, you're not going to say, hey, how does this look? I mean, I would almost go to a couple other people and ask how it looks and then bring it to them as a finished product. But it's really bringing something of massive value to someone where they're going to sit there and say, okay, this person put a lot of time and effort and energy into this. This is awesome. And I can utilize this and it's going to make me better. Then that's adding value. You know, like you said, I have people calling all the time saying, hey, how can I add value to you? And I really don't know. We've got so many different things going on, so I'm sure people can, but it's you don't want to make it the other person's responsibility. You want to make it your responsibility to find a way to add value to people.
Mm-hmm. I think that a lot of your experience with regards to operations could be quite valuable for a lot of people. So on the subject of operations, what do you feel that you are doing that really kind of, I guess, lightens or streamlines your workload?
Yeah, it's more on the once you close part of it, and it's really building the systems in place to hold the managers accountable, and tracking KPIs and doing all those types of things. It's not something that's being done often enough in this industry for sure. And so, really, asset management, that side of it is where really Gary, my business partner, and I's secret sauce is, and where we can take properties to the next level.
Mm-hmm. So you guys basically are focusing on kind of the asset management side is what it is that you're doing best. Now I'm thinking even before you get to the deal, are there any particular like business level operations that I mean, because I feel as though oftentimes that there's so many things that need to be done, that needs to get done in the business, and it's almost like never ending work, right? So what is it that you do to kind of uh, I guess, kind of streamline that process before you go into the deal from an operational standpoint?
Yeah, I mean, it could be as simple as setting up certain KPIs and working with the right
Mm-hmm.
company to get the right KPIs, right? So
Mm-hmm.
we work with RealPage, and they set up our 50 plus KPIs for us, and we work with them on what we want to see and how we want to see it. So you're not doing that after the fact. I mean, these are all things that should be set up in advance. And a lot about management and operations is being proactive, not reactive. So
Mm-hmm.
you hit it on the head there, and you want things set up now so that when that time comes, you already have that system in place. A lot of people wait and are reactive, and they waste 2, 3, 4 months and a lot of money because they're trying to catch up. And so it is about setting up those systems in advance and trying to think about your business 30, 60, 90, 120, or even years in advance of where you're going to be so you can set up those types of systems. But yeah, absolutely. Even when we're closing on a property, there's so many things that the general partnership needs to provide for the lender, let's say. So we have a system in place to where every general partner needs to fill out a checklist. And on that checklist is everything that the lender is going to ask for. That gets uploaded into a Dropbox, and then it's there. And so now we're not scrambling for 1 or 2 pieces of paper from 5 different people. It's all uploaded and done prior to that. And so those are the types of things that you can do from an operations standpoint that really make your business kind of flow a lot better.
Mm-hmm. Now, for those people that perhaps they do have some systems set up or some of these things set up, what do you think are some of the biggest mistakes that they are still making?
Not following up. A lot of people pay a lot of money to have systems in place and finally get them in place, and they just expect them to run. And that's just not how things happen. In a perfect world, yes, that would be the way that they would happen. But unfortunately, they just don't. You're working with human error. You're working with people. And so you always have to follow up. Even if you're talking to someone face to face and they say, okay, I'm going to get this done. And then when they tell you it's done, you cannot just expect it to be the finished product that you envision in your head. So you've always got to double check. You've always got to follow up and go the next level. And that goes with KPIs too. You can get an email every day that shows you your KPIs. If you're not looking at them and then making a decision, a business decision based on those KPIs, then seeing a daily KPI sheet is not going to do you any good, because all you're doing is reading data and not doing anything with the information.
Mm-hmm. Yeah, yeah. I think that's really key. Like you said, following up. Not necessarily. Would you go as far as say it's not micromanaging? It's not micromanaging.
No.
Yeah.
Yeah, there's a huge difference between that. And I think micromanaging gets to the level where, you need to step back and let people do their jobs. But there's always got to be a system in place and triggers to allow for accountability. I would never hire someone to run my business without having systems and checkpoints in place to hold them accountable. Otherwise, they can do whatever they want. And how would I ever know that my business is succeeding or failing, right? Other
Mm-hmm.
than just checking the statements at the end of the month. But if you always want your business to be improving, there has to be checkpoints, follow up, and accountability. And there's a difference between that and micromanaging someone. Micromanaging someone is basically doing their job for them and not allowing them the flexibility to do their job. We certainly like to do that and want to do that and empower people. But at the same point, they do work for us, and you need to have those checkpoints for sure.
Mm-hmm. And if I may ask, how do you go about like doing that? As far as like, let's say like that you have this role, a particular role A, do you basically set up like guidelines and everything and say, okay, this is what you're expected to do. These are the guidelines. This is kind of like your level of authority or range of authority in here. If you go beyond this, then you should contact me. Like, how do you go about setting these things up in your business?
Yeah, clear guidelines and expectations, right? So written out guidelines and expectations. And then when they do have something due and they send it in, it's that follow-up piece. It's about reviewing it with them. So it's not necessarily like, hey, this is wrong, this is wrong, this is wrong. It's let's sit down and review this together. Oh, this is fantastic. I really like this. This is great. This here, I'd like to see it improve a little bit. Here's why. And a lot of people don't also go into that next piece. It's like, why do you want this to improve? What's your thought process behind it? And how can you help improve it, right? So you always got to come with solutions, but instead of just saying it's wrong. But yeah, it's working together with someone to help them improve and your business improve. So I think there's two pieces to that. You always want to make sure that the person that's working for you, you're adding value to them and you're helping them improve along the way, making them a stronger worker.
Mm. Yeah, that's one of the things. I mean, I love what you said there because it just kind of reminds me of a big mistake that I made early on when I started. I ran a business in Beijing for about 10 years. It just reminds me of a mistake that I made. I think that I just kept so many things just in my head, right? And I didn't realize just kind of what level of detail I really needed to think about my
Mm,
business, the systems and the processes and things. And I mean, I swear, I was like losing my mind for like the first year. And I was like,
hmm
why can't anybody do anything right? And then finally, a really good friend of mine, she's like, listen, what you need to do is go through your business, look what can be put, written out into a system, and then write the guidelines and everything for that. And then train your people and give that to them and then let them run with
Yeah.
it. And that changed everything.
Yeah, what's really helped me too is I use Loom to record videos, training
Okay.
videos for a lot of our people who do some work for us. And during those videos, you really understand how your thought process actually needs to improve. I'll actually do a video thinking, okay, I've got everything set up. This is good. And I'll get to a point where it's like, oh, this person will not be able to do this because it's not set up properly for them on the front end. So, as a manager or owner of apartments or whatever it is you need to do, you really need to think about your process, because if it's all in your head, you know how to do it. But when it's out on paper, when you're writing it out or doing it on video, you're going to see very quickly where there's some loopholes or some things that you need to improve first to make sure that you're setting your staff up for success. And it really starts and ends with you, right? Even though you're hiring someone to do the job, you're the one hiring that person. It starts and ends with you.
Mhm. Yeah, and that's a really good point too. One of the things that you mentioned that kind of triggered a thought in my mind was the difference between working in your business and working on your business. So if we were looking at this, what would you consider this to be?
As far as an interview or setting up the videos?
Well, like with the videos and kind of all these
Yep.
processes and things. I mean, this is more so like working on the business, right?
Yeah, it's
Yeah.
100% working on the business. Yeah, you're not the one doing it, but you have to set up the system in order to be in place. But yeah, that's
Mhm.
the goal, is to be able to have someone do all the things that are not the high ticket dollar items, and how can we continue to grow? And if you're doing it yourself with your head down and working away, and you're doing things that, like posting on Facebook or whatever it is, you're working in your business there instead of on your business. And businesses don't grow very well when you're working in it. You need to really be working on it. And that's all about structures, infrastructure, systems, procedures, things like that.
And it's very tedious setting this stuff up.
Yep,
It really is. And it's very
it is.
frustrating because, I mean, there's so much thought that has to go into it. And then all the writing out of everything. And like you said, even recording the videos, and very, very tedious, but it makes a world of difference. It really
Hmm.
does. And I mean, I think in what you just said too, you hit the nail on the head. What, like, when I think back about my business before, that totally stunted our growth because I was so busy working in the business. I wasn't working on the business, and we just hit this plateau. And I mean, I swear it lasted for like a year and a half. And it wasn't until, yeah, I made that shift and started working on the business that we started growing again, completely different.
Yep, I agree. And that goes back to our whole challenge of not building a team sooner, and it's not just partners on a deal, it's building out a whole team that can really round out your business and your company so you can continue to grow. You definitely hit walls and speed bumps and things like that. But if you're trying to do it all on your own, there's only so much that you can get done.
Mhm. So how is it that you guys are continuing? Because I swear I see you guys are always doing deals. And how is it that you continue this upward trajectory?
Yeah, it's just that consistency and always implementing something new to improve the business. We don't like getting comfortable. So every quarter, we try and do something that gets us out of our comfort zone, whether it's starting a podcast, starting the Asset Management Summit, being out in our market more often. We started a meetup in our market where we fly to our market once a month to do a live meetup. So there's things like that where you just have to keep pushing yourself. We're writing a book now. And so it's all about getting yourself out there and continuing to grow and continuing to push and looking forward.
Hmm.
And the only way to do that is by knowing you've got to work on your business, not in your
Hmm.
business.
Yeah. What would you say is a key piece of advice to new people out there?
Yeah, have a plan in advance and then work on that plan and grind on it and just stay consistent. I mean, I honestly, it may sound very simple, but if you are consistent, you are ahead of 9 out of 10 people, because there's just not enough people out there that are consistent in this business. The ones that you're always seeing, the guys that you're looking up to, those guys are all consistent at what they do, and that's why they're doing well. And other than that, this business and any business really takes persistence and perseverance. It's not one of those things where you can work on it for 6 months and you're going to be uber successful, right? This takes years and years and years, and you're a constant student of the industry. And so, but it really boils down to consistency for me.
Hmm. And what would be a good book recommendation you'd have?
Yeah. So one of my favorite books, a lot of people say Rich Dad Poor Dad by Robert Kiyosaki. My favorite is actually Cash Flow Quadrant. And it's because I was a W-2 employee. So I was that employee. And it really teaches you, why you want to be as a large business owner or an investor, from tax purposes and just freedom and everything. And so I absolutely love that book.
Hmm. That's a really good point, actually, on that. Uh, that reminds me of the main reason, actually, why I made the pivot last year, seriously looking into real estate syndications. It's because I realized that before that, even with the business that I had, it was really just kind of me working, the self-employed, quadrant and these things. But I really didn't have, let's say, something like basically money working for me. It's a completely
Yep.
different story. And I realized, I reached a point where it's just like, well, I have this income and everything coming in, but I don't feel wealthier. And I mean, and I think, like you said, in the cash flow quadrant, he really, makes that very clear and brings up a good point. And I think that was actually the trigger for me.
Yeah, absolutely.
Yeah.
It's a mindset shift for sure.
Yeah.
And it's not easy to understand, but once you do, it's kind of like, the light bulb goes on and, it's all different from there. So.
Yeah. And how could our listeners get in touch with you if they wanted to reach out?
Yeah, I think the best way is to check us out on the Asset Management Summit Facebook group, which is Asset Management Summit, and then also amsummit2020.com to check out the Asset Management Summit, which again is completely free. That's the best way to find us right now. We're going to be pushing that out here for the next several months up until the launch date of September 21st.
All right. Well, thank you so much, Kyle. It was a pleasure speaking with you today.
Yeah, thanks for having me on, Dion.